Andrew, hi, morning. Firstly, a word on what you expect from the Reserve Bank. Would it be a status quo policy because they've done whatever they had to?
Yeah, I think so. I think you know it's going to become a not quite a non-event because we'll all be scouring, as we do with Bernanke, the words of the governor in terms of what he's saying. Yeah, I'd be surprised if he's going to come out and say, listen, I'm going to reverse this in the next 2 to 3 weeks. Otherwise, he's just really giving all the kind of currency guys, the extent of saying that I'm going to finish the tightening and the rupee will depreciate. So I'd be surprised if he's going to be so articulate in when he's going to end it. So I'm not really quite sure what I'm looking forward to, really. Hopefully, he's going to talk about when he might start to think about the growth part of the economy, which is key, and he keeps pushing that back onto the government. But at some point, he's going to have to play a role. So I think that's what I'm looking for. What he's going to say about growth and what he's going to do about that, because obviously the recent actions by the RBI, have just crushed most people's expectations of any kind of recovery in the next quarter. That's for sure.
What is it that you're expecting to hear from Bernanke? Because that is going to sort of dictate which way the dollar index heads, which has been somewhat weakening in the last couple of days.
Yeah, I mean, again, with Bernanke, I think he's not going to really kind of come out and say too much. I think he's going to reiterate what he's been saying before, and he shouldn't really move away from that script. I think the more interesting thing about what's happening in the US is who's going to take over from Bernanke. Is it Yellen, who would obviously, you'd expect continuation of the policies which she's been involved with, or is it Summers? And with Summers, who knows what he might want to do, having a fresh look at all the policies that have been put in place by the Federal Reserve. So there's some risk to bond yields on the upside as far as I'm concerned in the short term anyway, just in terms of change of leadership. If it's not Yellen and it's Summers, then there could be some kind of concern about that. But with bond yields at 2.59, I think it's telling you that the end of easing is coming for the US sooner rather than later.
Tata Global Beverages is at 162. This is one stock from the FMCG stroke consumer space which has managed to buck the trend. Andrew, what is fueling Tata Global Beverages? Starbucks, defensive nature of the business, or the fact that global tea prices have gone up?
I think obviously it's a company we've liked for some time. And I think really it's because of the Starbucks connection and so forth. It's really been thrown into the spotlight for the first time, and I think it's a long-term play, on a different kind of concept within the consumer beverage market. And I think my view is that we'll probably see the share price continue to move towards the kind of 200 rupees level over the course of the next 6 months. Valuations are not obviously cheap as they are in any consumer stock these days. So it's one that we like, it's one that we've been buying, and it's one that we'll keep for the next year or so, because we think the dynamics of this company as such will mean that it's going to be re-rated, not necessarily very quickly, but over the course of the next 1 year.
Andrew, have you been liking the IT earnings that we've seen this time? After Infy's surprise, there was TCS, and on Friday we saw good performance from Wipro. Not this quarter, but the guidance they set out.
Yeah, well, I think I think our expectations for the IT sector were a little bit too low. I think the problems that Infosys has really kind of taken our focus away from what was really happening, and I think we're all a little bit more worried about how the guidance could be lower than expected. So I think positive surprises there, but I think we're all looking for any kind of positive surprise in earnings at the moment, but I think we're through all the better earnings from companies now, and as we go into the kind of latter part, expect earnings to be very, very poor. And further downgrades to earnings are likely to happen, particularly in the banking sector, which have been helped by the bond yields in the last quarter. This quarter obviously is not going to be so comforting for them. So, lots of problems in the banking sector still.
Andrew, Infosys is up more than 17-18% from the result day. Now, the management is clear that nothing will change and nothing will change, at least in the short term. Do you think somewhere markets are pricing in too much of optimism when it comes to turnaround?
Listen, you've got to hide somewhere, and if you're seeing some growth in Infosys for for the first time, or expectations that it's not going to get as bad as it has been, then obviously it's a highly weighted stock in the index, so you have to have some exposure. We've kind of tended to look down and looked at the Tech Mahindra Satya merger, and that's really where we're continuing to have our main holdings. And we think there's going to be a big re-rating of this stock over the next 1 year, as size, does matter in this industry, and I think you'll see some shifts away from the top 3, top 4 towards Tech Mahindra going forward. So we think there's a valuation gap which can be closed there. So whilst we wouldn't chase say an Infosys, we're happy to hold it. We think there's more value and more upside in a Tech Mahindra at the moment.
Okay, that's the call coming in on technology, which has been a good performer for the last couple of trading sessions. But Andrew, the one space which is really disappointed when it comes to the earnings has been the banking pack. How many more quarters before we've seen the asset quality poison getting out of the system?
Oh, listen, I think the quarters, I'd probably say years, because all the banks are hiding so many restructured loans. If you speak to any good corporate, they'll tell you all the problems in their own sector and where all the problems are in the banks. They're just not showing it. So I don't think you can say it's just 1 quarter away. I think what you have to look at is what the valuations are, and valuations of some of the PSU banks now are hugely compelling. It's whether you want to step in now when you probably expect the economy to take a further dip in the next quarter, and with that corporates, problems within corporates in terms of working capital and obviously higher interest payments is going to affect the sector for 1 more quarter. So, are we buying at the bottom? I think we're very close, actually. First time for many years now that I think PSU banks are looking more attractive than they have done. So the call now, to be honest, is not how many quarters it's going to take for restructuring of some of these banks, but which ones have the capability of coming through quicker, and really what you think interest rates are going to do. And our view is increasingly becoming more bullish that interest rates will tumble down in the second half of the year into 2014, and that will provide the opportunity then to get back into, or to be in, interest rate sensitive stocks. So it's that call which I talked to you both about over the course of this year, is when to move from defensives to interest rate sensitives. It's very close, and I think over the next 1 to 2 months we'll probably be making that switch.
Andrew, really appreciate your time and thank you for joining us.